Wednesday, October 22nd, but I'm recording this the night of October 21st. Same thing, except it's 8 o'clock, not like 5 o'clock. So we've already had our earnings. I will go over all the earnings. I will address a comment from Spotify that was ridiculous. I will add Alpha Picks didn't do well, didn't do great. Gold got killed. We will go over earnings. We will go over the economy, what it's all about. We will go over stocks that I love in my profile right now. We will go over several that I love coming up on earnings. We will go over a stock decision that I have to make because I got to sell, but I don't want to sell. And we'll go over the earnings that you're going to see tonight because by the time I go over this, you're already going to have heard from a bunch of companies. So it will be about earnings. But I want to start off with where are we? Well, Qs were down 0.21%. It was nothing. The Dow set a new record because we had some records with GM and other things that we're going to go over. But let's first start out with some comments. This was a comment from Brando on Spotify. I downloaded Alpha Picks and immediately deleted it. All it does is give you news headlines, nothing that I can see, that I can chat GPT or Google. Anybody that knows what Alpha Picks is knows you can't download it immediately. You can't delete it. It's a portfolio. Alpha Picks is a portfolio. Okay. And if you went and downloaded it, I don't know what the hell you downloaded. So I said, wait, so you paid $450, then got a refund? It's not something you download. It's a portfolio of stocks. And if you're confused about what you bought, how can we trust your review? It's like saying you hate the iPhone and then we find out that you have an effing Android phone. And Brando gets back to me. Oh, I didn't buy anything. So when you promote Seeking Alpha Picks, no, I promote Seeking Alpha Premium, and Alpha Picks, Brando. Listening skills, listening. Again, he says, I just went to the App Store and I downloaded it on my iPhone. I downloaded it, didn't do anything special. So what did you actually download? That's what I want to know, Brando. I don't know what you downloaded because every time I tell people to download things, I tell them to go to Linktree. It is literally on your screen. So you're confused because you downloaded something that I'm not promoting. Why? Because you're not looking at your screen and you're not listening. Linktree, linktr.ee/daily stock pick. Yes. Seeking Alpha Premium has an app you could have downloaded. Yes, it has news on it. No, you did not get the quant rating. We will go over this. No, you did not get to put in your portfolio and get a score. No, you cannot find top stocks. So again, know what the hell you're doing. Listen. Don't just act and go out on your own because here's the thing, newsflash, my conclusion, he didn't follow instruction. First, you can't download Alpha Picks from the Alpha Store. Second, what you were talking about downloading may have been the Seeking Alpha app. I'm not even sure. And newsflash, this is like you going to Amazon and saying, I can get the same damn thing on Temu. FYI, Temu is not Amazon. You're looking for shortcuts, dude. You want free tools? They are out there. You don't need these tools to do great things. They help me. Remember, the podcast is not about you. It is about me. I just try and help you. And obviously, you're not listening. So I don't understand. But again, go ahead and jump. You could go. Here's a little tip for you. If you'd like to go and do something, go over to the Daily Stock Pick right here, dailystockpick.substack.com. You can download the Substack app if that's what you want to do. But I want you to go to the chat. And I'd like you to ask, not me, just ask people in here, what do you think of these tools? Go over to the private Facebook group right here. Ask people, what do you think of the tools? Because I am not the only one that has these. I am not the only one that pushes these as a great thing. There are many listeners that do. So don't go out and give me a review of something that I don't even know what you downloaded or that I don't promote because you don't listen to what I say. Go to Linktree. Go and download some of this stuff. Don't give me a review of something that I have no freaking clue what you did. So let's go over this Alpha Picks portfolio, okay? Because I heard from a friend yesterday, and yeah, I'm fired up about this because I got a text yesterday, and he said, my portfolio, my Alpha Picks was killed. It got killed. Well, mine was down 2.6%, which is a big day. It's a big hurt day. It's not great. Is that getting killed? Well, my Alpha Picks portfolio in just over a year is up over 50%. Do I care about 2.6%? Am I nervous about No, that's not getting killed. Look at the performance. Okay, we've had a lot of gold stocks, and we'll go over them. Gold got killed yesterday. Okay, one of the most recent stocks, the September 15th pick, was down 17% in just one day. Is that bad? Well, the position in my portfolio, even after that 17%, it's still up 10% in just over a month. Again, it was September 15th. Am I okay with 10% return in a month, even though I should have gotten out of it? Sure, I'm okay with that. Another gold stock that is in the Alpha Picks portfolio. Steve brought this up, so I'm not doing anything wrong. But KGC, this is Kinross Gold Corporation. This was down 11% yesterday. Down 11%. But again, my portfolio position in this stock is up 8%. And if you use the tools, and again, maybe we're going to TradingView. No, we're not going to TradingView. Douchebag, we're going to TrendSpider. And you can go over here and look at KGC. Let me calm down a little bit. KGC. Because the 4-hour algorithm got you out here with a 37% gain. So maybe it's time to sell a little KGC. Triggered me to sell. I'm going to have to make a decision because my portfolio position, like I said, is up, but I've got more than the holding percentage in Alpha Picks. So it triggered me to sell. I may have to sell my position and then wait to get back into this. Okay? And I'm not selling out of the position. They're in Alpha Picks. They have a holding percentage. Okay? They tell you when to sell. I want to hold the holding percentage. In a stock that does well on the 4-hour, in a stock that is gold, which hasn't been outperforming, but I do think continues to outperform. But let me bring up another one, because again, I'm managing this portfolio. And if you're listening to me, you're just not listening well. SSRM. This is a good one. This is one that Steve brought up as well. I sold half of my position, okay, as it got here, right before it got to 25. I sold it about 23. Why? Because I saw that $25 was a resistance point once, twice, 3 times now. And I'm saying, well, I want it to turn into support. So I took half of it off the table. Now this one, SSRM, was down a lot yesterday. SSRM was down 9%, 9.34%. I'm still holding the portfolio holding percentage, a little bit more. But again, you use the tools that you have. I'm not trying to sell you something that is out there and it's the only way you can do things, Brando. Go and find tools that work for you. If Seeking Alpha, you just didn't give it a try. That's the issue. That's why I'm upset, is because you're giving me a review of something you didn't try, because over and over and over again, I tell people, go to Linktree. Don't go to the App Store and download something. I don't use the App Store. I use the App Store for Webull. Go and download Webull right here. You get free stocks. Go and down Robinhood. You get free stocks. Go and download Visible Service because you get $20 off your first month. There's plenty of downloads here. But Alpha Picks, it's not one of the downloads. I've never said that. Seeking Alpha, it's not one of the downloads. The bundle, it's not one of the downloads. I've never gone over that. So again, understand what you're actually getting into. Understand what you're buying. Now, let me bring up a couple of the winners yesterday in Alpha Picks, because there were winners. And I brought this one up a little while ago. This was up 4%, LRN. Let's look at it. Why did I bring it up? Because this is one that has turned around a little bit, okay? We've got a resistance up there at 162, but I think this is going to start breaking through. We've seen it bounce off there. And I said the 4-hour algorithm has you in here right here at 145. Gee, you're up at 152. It was up 4% yesterday. Okay? Another one that I brought up before, Royal Caribbean. Royal Caribbean was up 4%. We can go and look at the 4-hour algorithm on Royal Caribbean. Again, this is part of the Alpha Picks portfolio. Had you in at 312, you're trading at 316. Is this part of the 53% of the positions that beat buy and hold with your average win at 18%? Because the MACD's down there. Is it still extended on the weekly? Not that much. RSI off of 50, goes to 54. Now I want to bring up another one. Okay, GM. GM is a former Alpha Pick. They closed it out on August 25th. August 25th, Alpha Pick said, hey, we're going to sell GM. Okay, not a great sell. It was up 15% today. Would I buy this one? Let's take you through how I investigate stocks using the tools that I have. Here, this is Seeking Alpha. Okay, the quant rating within 5 minutes, I should say 5 seconds. I can take a look at this and say, hey, fundamentally, it looks fairly good. It's got a B on valuation, a C- on growth, so the growth isn't there. Profitability, A+, momentum, B, revisions, B. With the earnings, this is going to update overnight, and you're probably going to get a new Analyze with AI. You're going to get a full analyst report. Okay, this was created on 10/21, so it was today at 10:30 a.m., so it was after the earnings. It updated everything, and it tells us, hey, the valuation appears attractive. The growth shows a mixed picture. Profitability is robust. Momentum is strong. Earnings revisions are promising, 19 up. And then you take a look at where it was 3 months ago. It wasn't as good, but it's still a hold in the quant. The quant tells me, hey, I don't necessarily want to buy this one. I don't want to sell it, but I want to hold it. So it doesn't look bad fundamentally. This may actually start to go up as some of the fundamentals become better. It went up too fast, so I would say, hey, I don't want to buy it right now. But if I wanted to actually buy this one, would I buy it? From a technical perspective, well, the 4-hour algorithm doesn't beat buy and hold. And I will tell you, if you go and look at a monthly chart of GM, I just know GM well. And I look at this and I say, you know what? This hasn't done anything since July of 2021 when it hit about 60. Is all of a sudden this going to turn into a $120 stock? No. I don't like this one. Okay? The rest of the world is going EV, which China dominates right now. The US is sticking with ICE vehicles. It's the only country in the world that's sticking with ICE vehicles. Why? Because it's cheaper to go EV, and China is producing very cheap EVs. I don't want to own this one. So for me, it would absolutely 100%, no matter the fundamentals, the story doesn't make sense to me. Another one that killed it on earnings this morning that is in the core portfolio that I hold a little is Coke. Okay? This one doesn't look great fundamentally. It doesn't have great valuation. The growth is anemic at best. Profitability, 6 months ago, it was A+. Now it's a B. Momentum, 6 months ago, it was a B+. Now it's a C+. Revisions, it's a B+, so it's up. Okay, but it doesn't look great fundamentally. Wall Street says it's a $77 stock. It's trading at $71. That's an 8% upside. Is the risk worth the reward? Well, let's go over and look at the chart. Again, pull up any chart. You don't have to have TrendSpider. I just so happen to have the 4-hour algorithm, which got me in at 66. I have identified this range, 67 to 73, as a range to trade this in. How did I do that? Well, just look at those lines. Again, you can trade it within this range since, let's see, August of 2024, last year, and you've done better than buy and hold. So for me, I took a look at Coca-Cola, and this was months ago. This was, 6 months ago. I said, hey, let me take a look at this. I've trimmed this name in my portfolio significantly, and I've moved that money to QQQ and VOO. Why? Well, look at this. 1 year, Coca's down 1.45%. The S&P's up 15%. 3 years, Coke is up 27%. S&P is up 79%. I noticed this at the beginning of this year, and I said, you know what? My money's not good in there. So let me move this, even though it's in the core portfolio, because I drink Coca-Cola and I drink Pepsi and I like them. And I have a small trading position in here. What do? I'm selling shares that I bought 10, 15 years ago for long-term capital gains, but I'm taking that money and I'm moving it out. Am I moving money back into Coke? No. When it gets up near this area of 71 to 73, I'm trimming that stock and moving it to VOO and QQQ. That's me. Don't do me. You do you, boo. Whatever you decide, that's my strategy. My point is, hey, you can live with my strategy if you want to be me, but if 50% of your portfolio is not an Apple, you ain't me. And so my advice might just fall on deaf ears. And if we want to talk about more earnings, GE did really well. GE did fantastic. They beat revenues by 17%. Earnings per share, they beat by 12%. It's fantastic. And then you look at 3M. Great beat. 5% on earnings per share, just above on revenues. Again, industrials are going well. So let me wrap this up. Earnings are going well. Netflix missed on earnings. Did it get killed? Down 6%. This will be more about whether they buy Warner Brothers, WBD, which, by the way, was way up today. WBD was way up today just on the rumor that Netflix may be looking to buy them. 4-hour algorithm had you in at 18. Today, it closed at 20. Closed at 20. Do I want to own this one? No, I would much rather own Netflix. Netflix to me is the king of streaming. Okay? I did mention yesterday, I didn't trust the buy in the 4-hour algorithm on Netflix. We can look at it. I said, hey, Netflix on the 4-hour buy at 12.41, I don't trust it. I didn't trust it. I didn't buy it. I thought there were better risk rewards out there. So I skipped it. Another one that killed it, Interactive Surgical after hours. It's up 17%. They just killed it. Again, earnings going well for the most part. Now, stocks that I have in my portfolio that I love, and I love even more, Amazon. I went on this warehouse tour of Amazon. Let me just give you an idea. This is my second or third largest holding. I don't know. I can tell you, if you have an Amazon tour in your area, just go and Google Amazon tour. Go and take it. You will see the logistics dance that happens in getting packages into the warehouse, then having them sorted by robots, storing them with robots, and finally pulled and sent out of the warehouse to your home. It's amazing. The automation, the thought process, do the tour. The one thing that shocked me, they don't place the labels, your address labels. They don't place those on the boxes. There is a puff of air that sends that onto the box. And the reason, they don't want to crush the box. That's the thought process. It was incredible. And this stock is incredibly cheap. I will tell you, the warehouse completely dark. It's all robots. Amazon's robot army may be even bigger than anticipated. I can tell you this was 11 football fields and there were 5,000 employees. That will be 2,500 employees probably within 3 years, 2-3 years. I would say the stock is cheap. Look at this stock. Okay, it's a strong buy in the quant, 4.94 out of 5. The stock is cheap. Is the valuation expensive? A little bit, but 32 times forward earnings with a 10% revenue growth year over year, with profitability, gross profit margin of 49%, it's cheap. And if you're saying, hey, the world shut down with Amazon, on Monday because they couldn't keep their stuff up, that's a company you want to own. One that has the world by the ball. They're just tickling your balls with a little feather. If they grab them and shut down, your testicles are in a little bind there. That's the company you want to own. They're the ones that got you in a vice. And what's your strategy on adding to Amazon? Mine, 4-hour algorithm. It has you in here today at 221. Am I buying this one? No. It is still a very large position for me, but I feel very good going into earnings with this stock. Why? Well, Wall Street says it's a strong buy as well. 51 strong buys out of 68 analysts. And their price target, average 266. That's a 20% upside. And if you look at this stock, okay, look at this weekly chart. It's down near the oscillator. The RSI isn't overbought. It's at 52. Then let's just bring up the Mag 7. And if we sort the Mag 7 by year-to-date performance, guess what's the worst performer? It's Amazon. And guess what's the only strong buy in the Mag 7? It's Amazon. Okay, every other one has a 3 rating and it's a hold. I love this company. I like this one. Another one that I love going into earnings is Meta. Wall Street says it's a strong buy. 50 out of 68 analysts say it's a strong buy. Now it's 18% upside. Their target is 866. The quant says it's a hold. And you can analyze why it's a hold. It gives you all of the things. But I will tell you, here's why I like Meta. A founder-led company that just prints cash and doesn't care what browser you use. We saw Google brought down today with OpenAI. We'll go into that one. They don't, Meta doesn't care what browser you use. And it has the most in-house AI talent. Founder-led. I love this one. Normal growth rates. Again, the growth is a B minus, but it's 19% revenue growth year over year. It's normal. A 20% upside to Wall Street's price target. And here's the key. If you look at this one, this has been trading sideways since February. This hasn't gone anywhere since February. It's been sideways. I like that. A company that is spending to be the leader in AI, and they haven't even started monetizing WhatsApp yet. The only time this actually traded down from February was the Liberation Day crap that happened. I took advantage of that and I bought a ton of this. I still like this one. Another one I love is Google. Why? Because the consumer is strong. Again, if you go over this, we brought up that earnings are strong. We're going to bring up the economy now. It's a consumer-based economy. We know people are spending. We know advertising is up. I don't think the browser stuff is a big deal at all. I don't count Google out. It dipped because of OpenAI today, because OpenAI said, hey, we're going to launch a browser too. But let me give you some insight. Okay, I think this pushes Google to actually use Gemini more. And I think it pushes people to use Gemini more. I have talked about it all the time. I love Perplexity, but I find myself using Chrome more than Comet just because I like the Google search. So I use Chrome. And you know what? Up here in the upper right-hand corner, I now have Gemini. And I find myself using Gemini more. So it's more about, hey, what's the current browser that everybody's using? Getting people off a browser. Again, I loved Comet. I was on one of the first ones on their waiting list to actually get it. I still love it. And I still love Perplexity. But I find myself using Google more, and then the ease of use. And yes, I will download ChatGPT's new browser. But will I use it? I don't know. That's why I still like Google. Its valuation is an F, but this is 25 times forward. This is one of the cheapest from a PE perspective of the Mag 7. And again, are people bringing their estimates down? 6 have brought earnings per share down. Nobody's bringing their revenues down. Nobody's bringing the revenues down. And FYI, if you want to get into self-driving, this has Waymo, and it's barely even priced in. Now, what does Wall Street think that it's worth? Well, Wall Street thinks that it's worth $249. I think you're going to start to see that they're going to start to bring that one up. Now, is it this time? I don't know. This is, again, a top 3 position. For our algorithm got you into 247. Did I buy more here? No, I've got enough. There's better risk and reward for me in the market than this, because I've already got a huge position in this. So let's talk about some of the decisions that I need to make. Because one that I've brought up is IREN. And yes, one of my alerts, you can see it right there. Iron sell at 55.20. Okay? In after hours, it's even down more. It's down at 52. I'm currently sitting on a 204% gain in my entire position that I will start to trim if we see it down tomorrow. That's just me. Remember, I cut half my position at this at about 34. We're trading at 55. So I will add to it when the 4-hour algorithm tells me to, because I won't fully exit my position. I will have smaller, but I will start to take some profits. And then one of the other alerts that I got today is one of the podcast ones. And again, sorry, Brando, you may not be able to analyze this one, but SEZL, it's a good stock. We found it in Seeking Alpha, and we found it down here at around 34 as it was upgraded. That was a 424% run. You've got a gap up here between 129 and 109. Maybe this one starts to make the move again. I have a decision to make. So again, like I said, these are decisions that I will make. Now tonight, by the time you're hearing this tomorrow, you're going to have heard from Vertiv, which is one of my favorites, VRT. I own this one. I sold this one at 70. It's trading at 174. So yeah, I made a mistake in selling this one back in April. GEV, GE Vernova. I love this one. I never got into it. I wish I would have. And you're going to hear from AT&T. Interesting, not great. Don't love this one. Like to trade it, but don't love this one. But what are you going to hear in the after hours? You're going to hear from Tesla. Now let's talk about Tesla. I have a really good feeling about this one. Their expectation is 50 cents per earnings per share. Last time they reported 40 cents, so they're supposed to go up. Okay, revenue, they reported 22 billion last time. This time they're expected to report 26 billion. Now, here's what you may not have read, but I know about Tesla because I follow these things. There are reports that SpaceX and the company X that Elon Musk owns bought the entire inventory of Cybertrucks from Tesla because they couldn't sell the Cybertrucks, okay? They get the $7,500 back because they ordered them before the September 30th, but they were delivered. Expect some good numbers. Some of these were delivered during the third quarter. I think all the revenue was recognized in the third quarter, but they may not have been delivered. So I expect the revenue to be up. And again, anything that's I'm saying is priced into the stock. So I expect some good numbers. But here's the thing. I don't expect this stock to hold up very well. We're not seeing full self-driving out there to the masses. I still don't have it. I love what I see on version 14. I'm holding my small position that I hold in my Webull account that I've said I will not sell, but I don't have a large position in this. But you know what I do have a large position in? XLY. And the reason I have XLY is because 40% of XLY is between Amazon, which I love, and Tesla, 41%. So I am invested in Tesla and I'd like to see it do well, But look at the run up that Tesla has had into this earnings. The last earnings, it dropped from $327 down to $300. And that $300 provided support, and it provided support again here in August. And then you started to shoot up. Today, you're trading at $441. I don't like it up there. I just don't like it up there because they haven't done anything to deserve an all-time high price right now. It's not like they're going to deliver more vehicles than last year. It's not like they're going to have more revenue than last year. It's all promise. So I like to trade this one. I own it through XLY because I can shelter myself. And you're also going to hear from another one that I like, but I don't own. It's Lam Research. This one, I like this one. So let me give you a surrounding for, and again, we're looking at Earnings Hub, but the earnings per share are expected $1.22. What did they report last time? $1.33. That's down. FYI, in Gary math, that's down. They're expecting $5.23 billion in revenues. They reported $5.17 billion in revenues this time. FYI, Gary math, that's up. So we have to go over and let's see what LRX is. It's a hold in the quant. Do I want to own this one? No, not really. Even though it's number 3 out of 32 in the semiconductor equipment grade, it's number 113 in the sector of information technology. It's a good stock. It's a good company. Don't get me wrong. When we look at revisions, again, 30 are bringing their earnings per share up. This is just within the last 90 days. 1 down. 29 are bringing their revenue up. 1 down. And what are the expectations? The earnings per share are expected down, but in the last 90 days, all of those analysts have brought them up. So I like this one, except when you bring up LRCX, and you look at this stock, okay? Just in April, we were trading at 67. You are trading at 145 right now. The last earnings, it went down from 98 down to 90, and then it took off. Why? Semiconductors have taken off. They will need to have a very good, robust earnings and outlook for this to justify that price. And when you look at a weekly chart, the MACD is as high as it has been in the last 5 years. The RSI, you are overbought at 74. I just don't like the way the stock is going in. Do I think it's going to go higher? No. Could it? Yes. It's part of the good news about, earnings. We just don't know where it's going to go. But again, I point this out. Now, let me summarize, because part of what you need to know is earnings are going good. We also have a good economy. And then you've got Fed in don't fight the Fed. We are in a bull market. Whether you like it or not, whether you will admit it or not, we are in a bull market. And you should be invested. Now, does it mean you buy at the top here? If your outlook is 1 year from now, I think you still look good on QQQ. If your outlook is 1 month from now, maybe you wait for a little bit. Maybe you wait for the end of earnings. Maybe it's just not worth the risk and reward. Maybe you wait until the Mag 7 start reporting next week. So again, understand your risk and reward. I understand mine, and I just went over all the decisions that I'm going to make over the next 24 hours. But I don't have a lot of stocks that are reporting in my portfolio this week because I've got this again, Seeking Alpha doesn't give you any, personal earnings calendar. I've got Barclays, which I own. I've got Lending Club, which I own. I've got GEV, which I watch. I've got Tesla that I own, T-Mobile that I own, VeriSign that I watch, Newmont Corporation that I watch, Nebius Group that I watch. That's all coming up between now and the 27th. So within the next week, that's all coming up. But I've got them all there because, again, something that I have is the Seeking Alpha bundle, and you can get that and save $159. Now, if you just want Seeking Alpha Premium, you can get it. If you just want Alpha Picks, you can get it. It's all here on Linktree. And by the way, you want my 4-hour algorithm? Just sign up for TrendSpider, the top link. Sign up for any annual plan. But again, don't go to the App Store, douche. Go to Linktree. And if you have any questions, again, I'm over here. I'm over here on Daily Stock Picks Newsletter. You can interact with me. You can send me a message. Even on Linktree, I have my email address. Say, hey, Gary, I downloaded this thing from the App Store. It doesn't make sense. Dude, you didn't download anything that I promote because you didn't go to Linktree. So again, if you have any questions, go to Linktree. I thank you guys for listening to me. I appreciate it. And I will be back live, I think on Wednesday. Was it? No. Yeah. Thursday. I'll be back live. Okay. Take care. Bye.